Alright, hello and welcome to Camel Finance. I'm your boy Camel, and it's Friday. I often say things can change and they can change quickly, but it's funny how much change can happen in just one day. Yesterday I put this out, I said, look, maybe we were in for another month of sideways, and that could still be the case, right? I said if we didn't break out soon, then we have to entertain some sideways consolidation cycles, or possibly even worse. But as you can see, stock market continues to rip higher. The Nasdaq as well. I was talking in yesterday's video about not shorting the Nasdaq, not trying to be a hero. Now, of course, this could still roll over, but when you've got such a powerful uptrend, the last thing you want to be doing is jumping in front of trains. I've been talking for a very long time about the VIX coming down to the low teens, and look what we got here, 15.64 for the VIX. So things continue to look very conducive towards this melt up. This continues to look like it's indeed in play. Bitcoin, if it's going to do Bitcoin things, really needs to break out of this downtrend. I will, of course, come back and do a deep dive TA. I know a couple of you like XRP, so here's XRP. As you can see, still above the green box. And really quickly, actually, something else that's important to show you. Look at the dollar. So the dollar, we've got two forces from the dollar, okay? The yellow line, we have clearly broken out, retested. Are we going to resume off? Or is this early warning sign in the form of a red trend line breakdown? Is that going to, in turn, manifest a continued downtrend for the dollar? I've been talking on and off about this getting rejected. I thought we would get rejected here and roll over and then do something like this. Is it just going to come from slightly higher up? That is to be determined, but things continue to look very, very conducive to upside in the market. So like I said, I'm going to do a deep dive TA, as I always do, over the weekend. I'll show you all of my live positions. As the realist trader on YouTube, of course, I'll show you every win, every loss, any mistakes that I make, because I am actually a pro trader. This is what I do for a living, so I don't mind showing you every single one of my positions, of course. Anyway, things continue to look good. The US House has passed a bill to suspend the national debt ceiling through January 1st to 2025. Now, remember what happened when they did this in 2019 of August. Just 1 month later, in September, just 4 weeks later, we saw the Fed have to return to emergency quantitative easing, that is to say printing of money and propping up the markets. And here we are, right? If the debt ceiling is raised, then the Treasury can borrow again. And they'd be borrowing a lot, months at once, trillions in treasuries. But who has that kind of dollars? Well, not the banks, because they died buying bonds, remember. Overseas investors are not interested because they're now buying gold. So the only person left here is the Fed. The Fed can perform yield curve control, and of course this means it could do so via the printing of money. So it looks like 2019 is going to repeat. It looks like what happened in August, where they crammed in a bunch of quantitative tightening that is pulling liquidity from the market, is about to occur. They are calling for 5 months of quantitative tightening in just 4 weeks. But of course, once that happens, it's going to force more banks to die, because the banks are, of course, holding these bonds. So treasuries become the new toxic waste. Like I said, foreigners, they aren't buying treasuries anymore. Instead, they're opting for gold. And you can see that here. So the yield curve control endgame in this context means the Fed, likely in just about 4 weeks' time, is going to have to dispense even more printed money to fund the government even more directly, because this entire thing is a Ponzi scheme. Something else I often say on this channel is I believe this to be a story of liquidity. That's all we're witnessing. Where liquidity goes, the stock market and Bitcoin generally follow. The stock market gains are nothing more than a reflection of liquidity. So this is why we need to exit the system with physical Bitcoin, gold, and silver. And speaking of Bitcoin, look, immersion cooled Bitcoin mining facilities are becoming this new mega trend. I don't know if anyone else has noticed this. I knew this has been going on for a while. Immersion cooled, if you don't know, they have a non-conductive fluid, and they dunk the entire mining rigs inside this tank of non-conductive fluid. Obviously, if you did this with water or something, it would just short circuit the whole system and it would all go bang. So you use a non-conductive fluid, and then you just run the fluid over the mining rigs and circulate it out through like a radiator. And what that does is it catches all the heat from the mining rigs, and then you can cool the liquid down and pump the cooled liquid back inside to keep this whole thing cool. So this seems to be a new trend that's emerging. This has been around for a while, but this is really starting to be embraced. This obviously speaks to this being very, very, very efficient, and therefore I would assume this to become the new trend in amongst mining. The Bitcoin chart continues to look great. You can see here, if we copy and paste this, it fits this perfectly. The reason I'm narrating this, by the way, is there is no sound. But you can see from a length of time, from a time perspective, when we grab this fractal and drag it over here, enough time has elapsed at the bottom of this curve. You also notice this is the exact same curve because it was copy and pasted across, right? So far, we've got a very, very nice symmetry in the Bitcoin market. Now, whilst everyone thinks that what we're going to do now is base from here, go sideways, maybe come and retest the lows into the halving before we end up going parabolic, whilst everyone thinks that, what you can actually see when you look at it this way is we have the same angle of attack as we had right before the parabola. We have the same amount of time elapsed right before the parabolic portion of the rally. So this tells us to be open to seeing a blow off top this year rather than the standard halving shape which everyone is championing. Now, speaking of that standard halving shape, I put this out yesterday and you can see I said, look, the Bitcoin halving causes bull runs. Most people think this is true. Very few people think that something else drives this bull market, whether it's liquidity, whether it is the Dow Jones needing to make new highs and the Bitcoin price following. There's various theories for what could cause the bull runs. But as I've been saying over and over again, first of all, nobody knows. Me, you, nobody knows whether we are going to top this year or whether we're going to repeat the 4-year cycle. But one thing we do know is the majority of market participants believe in this 4-year cycle repeat, meaning we're going to base from here and then enter a bull run after the halving. And most investors are positioned thinking that the halving is what causes the bull run. Now, this might turn out to be true. This might turn out to be true. Again, nobody knows, including me. But one thing we do know for certain is that markets always move to harm the most amount of participants. And the easiest way to harm the most amount of participants in this scenario would be to have a blow off top this year and then a 3-year bear market. And looking at the symmetry of this market that I just showed you, we are right around this sort of area ready for a parabolic advance. You can see the symmetry of the market is absolutely technically beautiful here. Now, again, nobody knows. We could easily break, we could easily base and go sideways, we could easily come down and sweep the lows. It's a market, anything can happen. My point is simple. Be open to all outcomes, particularly if we start to get very bullish out of here very, very quickly. Of course, yesterday marked the beginning of a new era. Hong Kong investors are now able to trade and buy and get exposure to Bitcoin. And you can see here the Asia year-over-year supply change. Asia are bidding the market. Asia are accumulating Bitcoin. Technically speaking, the charts continue to look better and better and better. We've had a bullish cross. Again, look what happened last time we had one of these bullish crosses. Look what happened the time before. 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 Now is not the time to be bearish, in my humble opinion. And if you're sat there thinking, well, okay, Camel, but we are still not really breaking out. We're not really entered this bull trend. It has actually been quite a quiet month for Bitcoin. So the selling pressure must be coming from somewhere. Well, yes, it is, but it's coming from miners to exchanges, as you can see. And it turns out that one big miner was forced to sell 90% of its Bitcoin that it mined in May. So this selling pressure that we are seeing is actually coming from miners. It's not coming from people selling their Bitcoin. It's not coming from whales who I've been repeatedly showing are accumulating Bitcoin. And remember, eventually this miner will run out of Bitcoin. It will have sold all the Bitcoin that it's going to sell. And then, of course, we can resume the uptrend. Over in Ireland, their prime ministers met with Gemini founders to discuss the potential of Bitcoin and crypto. Ireland is getting ready, and I love to see that personally. Meanwhile, Bitcoin active addresses and new addresses seem to have bottomed out with new participants entering the market. And like I said earlier, likely many of these new participants are going to be coming from Hong Kong and China. And so we've kind of already done the charts. I'm not going to go ahead and repeat myself. As always, I'll be doing a deep dive TA, show you all my live positions, win, lose, draw, and how I'm positioning for next week as a pro swing trader. So make sure you come back over the weekend and tune in for that. In the meantime, it's Friday, not looking to take on any additional weekend risk, holding all current open positions. And as always, I hope you enjoy your weekend. Take care from me. All the best. Cheers. Bye.